We've all heard it, guys. The trend is your friend. But why is the trend your friend? Stay tuned. Hey traders, warm welcome to you. All right, so we've all heard this. The trend is your friend, and some people add except for the bend at the end. But why is that the case? Well, let's think about this for a second. Because I always like to kind of think about, even on a kind of granular trade basis, who's the other side of the trade, what's the time of day, how does it impact the trade I'm taking, the type of the month, all this kind of stuff, because I just want to think, where's the money flow? What reason does somebody have to buy this market after I bought it to make it go higher? And when I start to think about that, then I can feel more comfortable taking the trade based on my filter and trigger criteria. But why is a trend your friend? So if you think about the supply, demand, flow, and money flow, let's use NASDAQ as a great example. It could be cable, could be Swissy, could be CAD, could be any kind of currency pair or stock or commodity, same kind of thing. Anything that's based on supply, demand, and an auction process, even cryptos. The trend is your friend is because, especially when you're looking at longer term trends, because longer term trends generally indicate a longer term economic trend. So if there's a currency pair that's trending, then more than likely one of the economies is much stronger than the other, and that is not going to stop on a 6 months. It's not going to suddenly turn. There's it's a big train that's running, and why people talk about the train effect of a trend, it's because it's the bigger engine that's moving things. You look at the tech example here. Tech is running well, the earnings are doing well, the companies in NASDAQ are making more money, they're growing. For this to kind of turn around, it would be, if we forget a little bit about kind of exhaustion moves, which is a little bit different, perhaps we'll touch on those in a moment, but it would take a lot of companies to suddenly start earning less for people's perception of the NASDAQ to become less and to attract less money, for people to take money off the table. And so when you have these long trends, when you have perhaps gold trending, it's just a general broader thesis that's moving this market. And so there's always that pressure. Sure, we have some short-term dips, and that's where your technicals come into play. We have some profit taking from time to time. We have little pullbacks. We have kind of mean reversion moves. We have pulling back, because markets will never go in a straight line. They'll always want to pull back a bit. But the trend is your friend comes in because, if we've still got that upward pressure on the market from a general consensus and feeling that this broad market, whether we're looking at the DAX 30, whether we're looking at the Dow, whether we're looking at the NASDAQ as we are here, that is just going to continue to earn more, and the companies are going to continue to do better and better and better. That is going to always have an underlying bid on the market. So, when from a technical perspective, from an operational perspective, that means that when you do have such a strong trend, at the very least, you're not trading downside breakout moves, because you're going to try to predict the end of the trend. Now, sure, you want to take them intraday, you want to take them for 1 or 2 days, then fine, you might get away with it. But when we've rotated off the high of a trend and it's a big, strong uptrend, the chances of us continuing lower becomes less and less and less the lower and lower you get. Now, at some point, the trend will end. At some point, the opportunity changes, and maybe we go into a range-bound condition. You could argue this is a range-bound condition now, or maybe you kind of go a bit lower and you go into a downtrend, but that's going to take time to turn, especially with an uptrend, not so much with a downtrend. Downtrends tend to be a bit more V-shaped because there's a lot of buyers on the sidelines. So, when you're going with the trend is your friend because of the money flow and people's perception. That takes a long time to change, whether it's an economy, whether it's a basket of stocks, whether it's a commodity, whatever it is, because the participants are all looking from a longer term perspective. Now, do you get to a point where it kind of wanes and there's not so much strength coming to the trend? Yes, and we perhaps see that in this NASDAQ here. A lot of pressure coming in, but as you come into this, it's got a time period. It was the election, to be fair. But maybe people aren't that excited about putting money to work. They've got a lot of money to work already in there. Maybe some have pulled some off, some have come back in. You get a bit more of an equilibrium, unlike the kind of good, strong trend here. So what does it mean for trading perspective? It means that, you can, at the very least, be careful about, fading trends that have come back down. So like in this example here, be careful about selling at lows after a pullback, because just looking technically, that's a losing proposition over time. Now, I'm not against people shorting in trends, but why not make your life easier? There's so much stuff out there to trade. Why not just align yourself with the trend. You find, if you like shorting stuff, find something that's in a downtrend and find a good place to get short. If you like buying stuff, or if you just like trading stuff, then align yourself long only with stuff that's in a good uptrend. It just makes sense. In the day, guys, there's going to be some stocks in the Nasdaq that are weak, but a rising tide lifts all boats is another saying. In other words, when the trend is up on the broad market, that is going to continue to give a good pressure to most of the stocks, pushing them to the upside. Same if you're trading like gold miners and the gold price is getting lower, that's going to be an added pressure on the downside to these stuff. So the trend is your friend purely because that's the bigger money flow that's sustained over a longer period of time. They often take a lot of time to turn, especially uptrends to downtrends, uptrends to rotation. So why not leverage on that? Why not say, okay, well, the edge is there. Let me have that as my underlying foundation and build my strategy from that. Take care, guys. Whatever you're doing, I'll see you next one. Bye-bye.